Hi, it's Toby from Track Capital, and today I'm excited to have a guest with me by the name of Gavin. And Gavin is from Earl's Fort Group. I've been really excited to get Gavin on our podcast. I have been on Gavin's podcast recently, and I will put the link in our show notes as well, so you can go and check that out and check out Gavin's podcast as well. But Gavin, why don't you give us a bit of an introduction to yourself? Because I am excited about this. I know sort of a bit about your background and your story to do with property, and I did mention to you I'm excited to hear it in more detail. So if you give us a brief intro to yourself, that'd be great.
Sure. It's a pleasure to be here. Gavin Gallagher is the name. I'm based in Dublin, Ireland, and but I have worked all around the world. As I kind of like to say, I've bought, sold, built, and managed property from New York City to Dubai and Qatar and even Africa. And so I got quite a bit of experience, 25 plus years now since I bought my first property. And I've had all of the ups and downs that goes with a long career in real estate. So it's a bit of a roller coaster ride. I can tell you some like stories that will sort of make you think, geez, I'm never going into the property business. And then I can, in the same breath, I can tell you other stories where you'll go, my God, is it that easy to make money? And so it's a tale of two sort of parts very much. And I kind of think I'm in the third part now. So that's me.
That's great, and yeah, it's going to be sort of interesting to take the listeners through that journey, because I know one of the main points which I sort of picked up on was sort of you were involved at a point which was sort of difficult, hard, detrimental, was boom or bust for a lot of companies in the property and people in the property industry, which is of course the financial crash. So I think before we get to that part, why don't you start with how you sort of got into property and sort of where it sort of led you up going forward?
Okay, well, like to kick it off, I come from a house building family. Okay, so my grandfather and my father were both builders of houses, and so it was kind of in the blood that I would be involved in property in some shape or form. But growing up, I had no idea how that would, what that was going to look like. I didn't have any assumptions, and my dad was very. My dad had basically gone into the family business, and when he went into the family business, he got all of the, there's a bit of prejudice when you join a family business. Like the people who are not family members automatically assume everything is handed to you on a platter, and then at the other side of it, when your father or your cousins or whoever you're working with, they can be particularly hard on you because they don't want you to think that you're getting it easy. Do you know what I mean? And so you have the worst of both worlds in many respects. And so my dad had experienced that, and he was always telling me, Gavin, go and do your own thing. Do not think that you're going to work for the family business, because it's no fun. You don't get respect, this and that. So he went through this thing. And so I was kind of the view that, okay, I better figure it out myself. And but we went on a family holiday to New York. Well, it was a family holiday to America. My dad wanted to kind of explore the East Coast and West Coast of America. And so we flew for this big, long 3-week holiday. We were going to go to America. And we flew into New York City. And I was, I think, 14 years of age. And I can just remember the impression that Manhattan, the skyline, and all of that had on me was absolutely like foundational. It was like, oh my God, like the size of these buildings and stuff, and like the way they tower like above you so high. It had such an impression on me that when I came back from that holiday, even though I was only 14, I was obsessed with drawing tall buildings. And what I got into was drawing scale drawings of Empire State Building, the World Trade Center. And what I used to love doing was to draw, the tallest building in Ireland compared to them. And then you would do like, okay, let's see, I wonder what the cathedral, that I saw, I wonder how tall that is compared. And you had these scale drawings and stuff. So I got really into this, and I started adding more buildings. I started like studying books about New York and stuff. And after a while, I had these really elaborate drawings that had loads of different types of buildings in them and stuff. And people were like, Gavin, you're going to be an architect. It's very obvious, you know. And I was, what's an architect? And they would explain like, well, you're the guy who designs the big building, you know. And I was like, oh, okay, that sounds cool. And so that moment basically planted that seed. And when it came to doing my final exams, I was not an academic person. So I would get like 1 out of 50 in spelling tests and stuff. I was ADHD, like, you know, playing, you know, finding everything except schoolwork to focus on. But when it came to my final exam, I was told, no chance you're going to become an architect unless you kind of like button down and really start to study. So I went absolute obsessed with getting the points needed to get through. And believe it or not, I actually could be academic when I wanted to be. And sure enough, I got just like by the skin of my teeth into university, and I started studying architecture. But in third year of architecture, my father actually died. He went on a business trip to Africa, and he got very, very ill in Africa. And when he came back, he managed to kind of like get back to Ireland, but very, very like terminally ill effectively. And he lasted only a couple of months. And so that was the point where like, that's kind of like childhood is over. Now you're kind of being thrown in the deep end. And so between my mother and myself, we had to kind of figure out, okay, Dad was a house builder and had various kind of business interests and stuff. Let's see, you know, what was he up to? Because he was a very typical Irish male who would not share like the problems across the kitchen table, like, you know. And so it was suddenly like, whoa, what's this bank loan and what's this bank loan? And so he was like building properties and stuff, and you know, he'd have a big bank loan, and we had no idea like that the house was secured against the bank loan and things like that. So it was a real baptism of fire, learning how to cope with, you know, banks coming after us and all that kind of stuff. So it was a pretty difficult time, that initial period. And then my mother was insistent that I finish my degree so that I at least have some sort of education rather than dropping out and doing it. So to be fair to her, it was the smart move. Finished my architectural degree and started working for a big firm. And the big organization didn't work for me. I wanted to do my own thing. I wanted to be, you know, my own boss. So within about a year, I started my own architectural business. And it didn't really, like anyone who starts their own professional firm will know that, you know, you've got the image of, you know, what it's going to be like running your own firm, like, and then you've got the reality, which is much less glamorous, you know. And I was exactly the same. And I thought I was going to be designing all these big buildings and everything like that. And then I realized with the, you know, the first commission that I got was this couple that wanted a house extension, and I was like extending their kitchen. And I remember the fee that we agreed was like £8,000. And it took me months of work. And I remember thinking like, whoa, this is not going to be, I'm not on the highway to making millions here. And what's interesting is at the time I came across this little property in the west of Ireland. And it was an acre of land. It was farmland. It had cattle on it, but it was 25,000. And it was right in the middle of this town. And I bought this land for 25,000. And I went and I took the skills that I had as an architect to convert that site into a planning permission for 4 detached houses, each with their own little garden and a little driveway in and stuff. And I got the planning permission. And then I went and I met with this local estate agent. And I said, you know, how much would you think I'd get for each of these houses? Because I wanted to go off and borrow the money to build them and stuff. And so he said, I'll come back to you in a day or two with the information you need. So he came back and he said, I have a buyer for you. And I was like, I didn't ask you to sell it. I just said, and he says, yeah, but you have a ready to go planning permission for this piece of land. He says, the builder who we would be asking you know, to build the property for you and get the prices is offering to buy it. The land. I said, well, how much is he going to sell it for? And I was thinking that, you know, I paid 25, maybe I'll get 35 or 40 for it, you know, and I'll be very happy. And he comes back and he goes, he'll give you, with no negotiation or anything like that, he'll give you 125,000.
Wow.
for the land. And I was just like silently on the other end of the phone, just like, absolutely like my jaw on the ground, because I had spent the last, 6 or 8 months working for this couple on their house extension for 8 grand. And in the space of a couple of weeks, I was about to make 100,000. And I can remember just going, what on earth am I doing on the architectural stuff? Like, this is where I need to be focusing my attention. And so I kind of flipped the switch and went all in on the property side. And what I did was I kind of, rather than completely abandon the professional firm, I needed to bring in income. So what I did was I changed it from being an architect to being a development manager. And I started saying that I will, take your property and I will get all of the stuff you need. And then we'll actually build it out and we'll add the value that you need to add. And so I started working with clients doing this kind of thing. And I learned from working with them how to do some really tasty deals. And the first one that I did straight after making that 100,000 profit was I found this commercial property. It was about 600. I can't remember exactly the price because it's a good while back now, like 15 years probably. And it was about 680,000, I think, or something like that. And I bought this property, and it was just a big sort of cavernous retail unit. And what I did was I used my planning permission skills again to go and split the unit into 3 sort of self-contained units. And once I got the permission, got a Kango, like a friend with a Kango hammer, put in the drains and the water pipe and the electrical split. And that was it, like really simple, just to put up a couple of block walls, and went out, rented this thing up, and managed to get 3 quality tenants in. There was a video store, there was a pizza place, there was an off license, kind of a neighborhood center type thing.
Yeah.
But they were all sort of national brands that would have like a presence in pretty much every street corner. And so managed to get these guys to lease this location and put the property up for sale. So now, rather than it being a vacant, shell, it was 3 investments with 25-year leases to these brand names. And I didn't actually know what to expect, but I sold that property for about 2.5 million. And
wow.
So in the space of, another 6 months, I had parked maybe nearly, I think actually my profit out of it, I had a partner and we split it 50-50. I think we made 900,000 each on the deal.
And just on that then, did you have any understanding of the sort of commercial investment or commercial landlord landscape that you were going to be embarking on?
Yeah, I did by that stage, because what I did was when I finished my degree in architecture, I went and I signed up for a master's in planning and development in the same university. And it was this master's degree, it focused on valuation and all of that kind of side of things. And it was a real deep dive into, so how do you value land and how do you do residual valuations and this kind of thing. And also talking about yield and, the cap rate and all of that stuff, which I had no clue about prior to doing that course. But that really opened my eyes, and I suddenly realized, okay, so yield compression, I understood that term and all of these things. So suddenly, because I was working with clients who were doing similar things, I was sort of working for them, learning the ropes, getting paid well paid to do that, but at the same time then applying it on my own account. And so that first one was just a completely shocking kind of like, wow, this like is far more profitable than we expected it to be. And it was partly we were in the right place at the right time. We were lucky because at the time here in Ireland, we had what a lot of people refer to as the Celtic Tiger. And it was when we had become, the EU, we had said that we were going to join the euro. And for us to be part of the euro meant our interest rates were going to dramatically fall. And our interest rates at the time were like 8 or 9%. And Germany's interest rates were 2%. And everyone said that the moment we're in the euro, the rate will be 2%. And when that happens, everything, all property values are going to compress, the yield will compress. And so it was like, okay, how quickly can you assemble a portfolio? Because everything you buy is going to go up in value. And that was the kind of the way we saw it. So I just said, okay, this is my opportunity. And I sort of went absolutely hell for leather to do that kind of thing. So the next deal that I did was like less than 300 meters away from that one we had just sold. And we bought a piece of land. And this piece of land, actually, it was a building, it was an old building, okay, that had been used by a bank. And the bank didn't want to be in that location any longer, so it put the building up for sale. And I had been given a bit of a tip off that this was coming to the market soon. So I was prepared, and I had spoken to an architect, and we were going to knock the building down, and then we were going to build a new property on it. And so I had my ducks all lined up. I kind of said, okay, we'll be able to buy it for this, and we'll be able to build it for this, and we'll sell it for this. So the day it went for sale, I basically started engaging with the agent to buy it. And fast forward a couple of weeks, and we went to this best bids, and I put in my bid, and I got it for 1.2 million for this property. And like, it was only a couple of weeks after it had come to the market, I had secured it at 1.2. So closed the deal. I borrowed, by the way, 100% of the money. This is the kind of the times that we were in. What I did was I put down the 120 grand deposit which I had, but I borrowed everything else. And then, because I had to go off and obviously, get the construct this building and stuff, so I wanted to keep some money back. But what happened was, and this was really incredible, was a financial institution in the same town had noticed that, hey, there's a great site there, and it has this special designation of financial use, which is very particular in the planning system, and you can't put a financial institution anywhere. It has to have so they were absolutely the only people that would be interested in reusing that application. And so I didn't know about this, and they came knocking, assured as soon as I had sort of completed the deal. One of my friends reached out to me and said, agent friends, and he said, "Did you just close the deal on that property?" And I said, "Yeah, how do you know?" And he goes, "Because I was representing a client who bloody well was trying to buy it." And said that they're a big institution. They were like still going through approvals and board approval and all this. And like, now you're the owner, and they were about to bid. And I was like, "Oh, geez, I'm sorry," And he said, "Well, look, we need that property. Like, we have to buy it. So, what will it take to buy it off you?" And I just said, "Look, I've got a plan for this. We're going to knock it down. I've already got architects engaged. We're going to make some really good money on this." And he goes, "Well, look, what are you going to make?" And not a word of exaggeration, 6 weeks later, I had a profit of 2.5 million
Wow.
in my bank. Yeah, 2.5 million. And it was just insane, because this was the speed at which things were happening. Like, and it was a crazy time. And it was a time when it would be very easy for you to suddenly turn around and think that I am, Mr. Universe here. Like, I can do anything, and I am infallible. And so I suddenly got this false sense of security that everything turns to gold. And I figured out that magic formula to becoming very, very wealthy. And so, but what's terrible about that is those were the lessons I was getting. And so I was becoming bolder, and I was taking bigger risks, and they were all paying off. And so the next deal I did, it was an 8x return. And the next deal I did was a 6x return, and all of these things. And so in the space of a very short period of time, like 4 or 5 years, I suddenly had a portfolio of 65 million. Now I had about 40 million of debt, but 65 million, which seemed to me to be quite conservatively financed, And I went after this huge project in the south of Spain. Like, deals in Ireland were starting to they weren't looking as, profitable, because all the values had risen and stuff. And so we were looking at things, we were going, how is anyone going to make money on that deal? Like, you know, and so it went on and on like this. And so I started looking abroad. And of course, that is one of the big mistakes you make, is that you start looking outside, you know, grass is greener, you know, that old saying.
Yeah.
And I went to Spain, and I bought a property in Spain as a holiday home because I had all this profit. And I started enjoying my time down there. And while I was down there, the agent who sold me the home turned around and said, would you be interested in one of these commercial units? And I was like, oh yeah, show me. And he showed me this unit, and it was actually off plan. And it was a shopping center that they were going to build in this marina. Absolutely beautiful location, right near where I lived. And I was looking at it going, wow, yeah, this is beautiful. I'd be very interested. So I put a deposit down on a unit, and I found a tenant for it really, really quickly. And I thought to myself, you know what? Why would I focus on this, you know, doing it piecemeal, one at a time? Why not just go for the whole thing and like basically buy it all and take full control of the entire shopping center? And that way I'll put all the tenants in, and I'll get the mix correct, and I'll do all this. And that was as simple as my philosophy was. It was like, I know what I'm doing. I've done this back home. This is exactly the same. It's rinse and repeat. So go for it. So I went and I structured this deal. It took a while to put it together. And
Are these all off plan, by the way? So all of them are off plan.
It was under construction, and so it was all off plan. And so basically, it was a shopping center that had 42 retail units that were all fronting onto this marina. So it was like a waterfront promenade with the front door opening out onto this beautiful marina environment with yachts that would, you know, moor up against and stuff. So it was just absolutely stunning. And at the same time, above that, then there was this kind of, I suppose you could call it a podium, and there was apartments built above that. So I was just taking out the entire commercial section. And so I put this deal together, and it was all the entire thing was 42 million. That was to buy every single commercial unit in it. And I put the deal together. I put a little investment sort of grouping together, and we put 12 million of equity down. 3 million of that came from me. 9 million came from these investors. And then I went off to Royal Bank of Scotland, we're based in Madrid, and they gave me 30 million of senior debt. And this entire deal was, I had conversations with Ralph Lauren, with Gucci, Prada, you know, all of these. Diane von Furstenberg is a name that really rings a bell. And all of these names were all interested. And I was thinking, this is going to be like a really top-notch, like boutique luxury location. And it's going to be, you know, really fancy. And I'm going to make a fortune on this. This was and so I signed the deal. And 7 days later, Lehman Brothers collapsed.
So when was it? 2000 and
so
wow.
2000. It was actually just around 2007, and at the end of November 2007, I think it was. And I can just remember everyone like going, you know, talking about, oh my God, you know, the world is going to turn upside down. And at this, like in Spain, it didn't immediately feel like that. But if you were watching, you know, MSNBC or one of those channels, it was like guys talking about, you know, bloodbaths and stuff. And I started to get a little bit nervous, thinking, oh gosh, I wonder what's happening here. And that was the beginning of chapter 2. And so you had this like rapid rise of a fortune, and in the process, getting a big ego, you know, driving flashy cars, flying first class, and having like, you know, I had a penthouse in New York City, a lovely villa in Spain. I was living in a 6-bedroom mansion in Dublin. I was only 35, you know, so this was like, I had made it, like, and 2008, bang, this happens. And suddenly banking is difficult. Deals are drying up. Like I had a load of deals that were kind of in negotiation or in sort of agreement, more or less. Heads of terms had been agreed, and we were now kind of thrashing out the contract. And there was one where I was going to make 2.2 million profit, and that fell out of bed. And I can remember I was thinking, okay, as soon as I get that 2.2 million, I'm going to use that to pay off this loan over here, because I want to get myself, you know, stabilized. And then the guy called me up and says, Gavin, I'm afraid the guy's pulled out of the deal. What you want to do? So I said, go back into the market. Let's see what we can do. And he goes, well,
was there a particular reason? What, obviously I know the market and everything was turbulent at the time, but was there a specific reason he drew out from his side?
He was one of the big names that in the Irish real estate sector. I won't mention his name, but he was a guy that like would be in the papers regularly. You'd know who he was, and his name was. He was the guy I was selling to, and he was one of these kind of like on paper he was possibly a billionaire, and at the time in 2007, 2008. All the property, the big contractors and all of these kind of guys, they'd all become billionaires. But it was built on like $1 billion loans and stuff. And so this was one of these guys, and he saw the writing on the wall, and he was buying this. Like I had done this deal for about 5.5 million, and I was selling it to him for something like 8. And I can remember like I was 2.2 million was going to be my profit. And I said, okay, I'll take that in, I'll pay the tax, pay off a load of debt, bang, I'll be much, much more stabilized. That fell out of bed. And when we went back to the market, the 8 points, whatever it was, the 8 million that we were getting from him, suddenly it was like, no, the best we can do is like 6.3. And I can remember thinking, what? Are you kidding me? Like, no, go back out and find somebody at 8, And that was this kind of denial where rather than realizing that, the market has changed, you will never, ever, ever, ever get 8 million offer again. And don't hold out thinking that somebody out there will. You just have to move quickly. And because I denied it, the 6.3 fell away. And then it ended up going below the value of the loan. And so now I was stuck where I had to keep on to that property. Another deal I was in the process of selling, I was going to make something like 1.5 million or something, fell out of bed as well. And I can remember all of this stuff was starting to kind of happen. And it was kind of like a cascade effect where one falls out of bed, that knocks your loan to value ratio, which is kind of put the banks under pressure. So suddenly they're not lending you money over here. And because of that, you're not able to finish a development. So the development is now kind of undervalued because it's not able to be sold. And this cascading kind of thing of events. And I fast forward, this whole sort of thing took a couple of years to unravel. But I can remember being summoned by my banks back. I was living in Spain at this stage, and I was summoned back to Dublin to meet the banks to talk about the debt situation. And I go back, and in the preparation for this meeting, I started preparing my net worth statement. And you have your assets on one column and your liabilities on the other. And I had done this over I had been religiously kind of doing it every year. I would update it, and it was always jumping like a healthy margin. And this is what had gotten inside my head. Like in any year, like you'd be up 1.5 million, 2 million. That's like the increase that you were seeing. And it was nothing that you've done. It was just the market kind of lifting everyone up. And suddenly I'm doing this for the first time, red ink popping up on the screen. And I looked at it, and it was my total net worth was minus 16 million euro. And it was like to go from hero to zero, like and minus 16. and it was, laugh about it now, but at the time you can imagine this was absolutely like devastating. And it was horrifying because you kind of start looking around at everything you own, and like none of it is yours. Everything belongs to the bank essentially. And at my home, I had this big 6-bedroom mansion back in Dublin. But I had moved the family to Spain to kind of work on this big Spanish deal. And so the banks moved on me and took the family property off me. And normally they can't touch family property, but because they say it's not a family property, you're living in Spain. So they went and they moved, and it was sold. And when I had moved into that property and given the banks my valuation, it was worth 5.5 million. That was my home at 35. They sold it in the market for 1.5. And so it was absolute like horrifying, super frustrating, really blood boiling, kind of watching all of this stuff that you'd worked so hard to build up getting stripped from you. And anyway, I didn't declare bankruptcy, but it was extraordinary, like, because I did have enough assets that there was some sort of hope that these things will eventually claw their way back above the red line. And so, but what happened was, it was just this death by 1,000 cuts, where constantly at you, like every time I picked up the phone, it was somebody pulling a plug on a deal somewhere, or it was something else. And the final straw, where I suddenly realized like the game was up, and it was kind of like the most humbling moment, was I got this, it was actually coming up to Christmas time in December. I think it was 2012 or 2013. And I got this email, and it was my main bank that had been, like, all of the debt, most of it had been with, telling me that we are triggering the full rental sweep. And what that meant was every penny of income coming in through all of the properties that I had was now going to be diverted into their account rather than into my account first. And so it meant that all of, like, I'd been living off of, there was this surplus because interest rates were low. I had this surplus coming in, and then I was feeding all of the interest payments to them, and, making the various management and expenses that had to be paid. But there was still a margin left for me to live on. And they came in and swept everything away. And you then had to apply to go and make payments. So with that, suddenly I actually didn't have any income at all. I was completely wiped out. And I had to go cap in hand to my brother and ask my brother if he would allow me to live rent-free in an apartment back in Dublin that he had. And that was like, pride swallowing, because you've come from being Mr. Big with the flashy cars and the lifestyle to match. And, anytime you wanted to go on a holiday, bang, just jump on a plane and bring the family and stuff, like go first class. There was no consideration for cost. Suddenly everything is costing you. Like, can I afford this? Can I afford that? And it was a really difficult moment that put a huge amount of pressure on my marriage fell apart as a result. So I ended up divorced. And it was just this moment when I realized that, do you know what? I've been spending a huge amount of my time blaming the world for this terrible thing that's happened to me, instead of, standing up and taking ownership and just saying, you know what? There's no rescue plan here. No one's coming along to like bail me out. I have got to sort this out myself. So with the gratitude of my brother, obviously, for helping me out in that moment, that was the turning point where I kind of said, okay, it's time to kind of like leave all the past behind. Stop thinking about how it was. Look at what you've got. Stop focusing on what you've lost. Look at what you've got. I've got my health, and I got even healthier after that. I've got 3 children that my daughters at the time, I have more now, but at the time I had 3 daughters, and they were healthy. And I had this bank of knowledge and this network of people and investors and all that kind of stuff. And I thought, okay, I'm going to go and just build it back and go again, And it's not as simple as that. Like, I'm still in the work. That's a work in progress. But one of the first things that I did was I had left, like, I had not been involved in the family business that my father had been part of, primarily because I was doing so well that I had kind of left it. And I had sort of said, you know what, I don't really need, to be involved. But beggars can't be choosers when you're kind of like looking for every like possible avenue to kind of make some money. So I actually went and I started working with my cousins that were involved in this Earlsford group.
So were they running it at the time then?
They, like, I was a shareholder in a small way, but I represented the my sort of wider family's interests. There's a couple of different families involved that are we all share the same surname, but it comes kind of, and those guys were looking after the business, and I came in, and I was arriving in, and I was, there was a certain amount of like, well, you've been off doing your own thing. Why the hell should we let you in here? But of course, I'd been I'd been in Dubai, I'd been in Qatar, I'd been in Spain, I'd been in America. I had a lot of commercial experience, and I had built up this kind of knowledge of how deals are put together and what do tenants look for. And so what I did was I went in and got involved in the running of we have a business park here that the family business is involved in. And we've basically built up this business park from being a landfill site originally. And we've now got on it 37 office buildings that are filled with big, global sort of names like Google and Oracle and some of these really big names. And they're the occupiers in these buildings. And so given my sort of background, it made sense for me to get involved in the day-to-day kind of with these guys. And so my role now today is pretty much running this business park and running all of the assets that we still have in the business park, and basically being the liaison with the tenants to try to understand where's the market going, what does the future look like, because it's a post-COVID, it's a very different world we're living in. Like obviously big office occupiers, they don't really know what does the future look like. A lot of them have staff working from home. So it's trying to read the tea leaves and trying to understand, okay, if we're going to go and make this asset more valuable, how is it going to look going forward? So there's a lot of time spent on all of that kind of stuff, meeting the big tenants and speaking to them and optimizing the assets and making this business park as good and as valuable a park as it can be.
On that then, so obviously pandemic hits, how were your commercial tenants at that point? Because I know, like you mentioned, a lot of people started working from home. Not many people were going into work. So how did it affect the business at that point?
It was, well, a couple of different ways. First of all, one of the benefits of working with big names, like big global names, is that they have big, long leases. And so 20-year lease, 15-year lease, whatever it is, these guys are signed up to go and pay rent. And so, big occupiers, they send all their staff home, but they still have to pay the rent at the end of every quarter. And so that, or at the beginning of every quarter. And that's exactly what happened. So from a cash flow point of view, it wasn't the end of the world. It was like we still had rent coming in. But from the future, looking into the crystal ball and looking ahead, you're saying, okay, well, you've got, like, at the time when before COVID hit, we would have, like, as a big business park, we would have 8,000 or 9,000 people a day coming in to work in it. And like, we have a private shuttle service that the business that I run, that we operate. And we bring people from our business park to the local train station and to the local commuter hubs. And we were doing 3,500 people a day on our shuttle buses, and 2,500 people parking their cars every day, and another 1,000 people cycling in. And, so there's a lot of logistics involved, and we've got security and landscaping and all that. Suddenly, every single soul working from home. And I can tell you, it's a strange thing, being used to the 5 o'clock rush hour and having to, like, drive into a queue of 500 cars, like, all trying to get out the same gate, to suddenly driving in and out without a single soul. Like, it was very, very convenient, I have to say. That's one of the benefits. There's no traffic any longer. The commute went from being 30 to 40 minutes a day to being like 15. And so there was some positives, but to putting the landlord hat on, you're looking at these buildings and you're kind of saying, like, these guys, like, some of them are saying that they don't need anyone going back to work, or we only need you to come in for 2 days a week and stuff. And so when you're looking at, we have a substantial portfolio. What the hell is it going to look like in 4 years' time when the next lease renewal comes up or something? Are they going to, like, say, you know what, we'll hand back the 5 floors and we'll just keep one, or something like that? So there's an awful lot of looking ahead now and trying to strategize and try to figure out. And also, on top of that, you've got this whole thing happening with the ESG. I don't know if you're familiar with with this term now, ESG, but in the large corporate sector, it is really, really powerful. And ESG is environmental, social, and governance. It's those three sort of areas that they want to make sure that your assets are protected for each of those categories, and in particular environmental. So a lot of these buildings that we've built them over the last kind of 15 years, and so they're second generation. And so when you're asking, is it sustainable? Like, it's not that sustainable. It doesn't have, the best insulation. The windows maybe are not as airtight as new buildings would be. And so there's an awful lot of retrofitting now. So I'm in the process of putting together this one of our tenants has vacated a building, and it's a significant enough size building, and we have to spend about 6 million renovating and refurbishing and bringing it up to a standard that new occupiers will look at and think, yeah, this is perfect. It's got all of the sustainability that we need, and be able to move into it.
Wow. And I suppose so through that sort of journey, obviously to where you are now, because I know sort of you're very sort of big on the whole mindset. Now, just listening to that, you obviously I can only imagine what the mindset process was throughout that, because there's so many ups, then there's a very sharp down, and then you're sort of slowly back up to where you are today. So I mean, you didn't, like you mentioned, you kind of wrap yourself in a bubble at some point. It's kind of blocked it all the noise out, which obviously can help, but then you had to deal with it in the end. So how did you manage, because I mean, property is an absolute whirlwind, whether that's commercial, residential, whatever part or aspect you're in, it is, because the market does change, it fluctuates of course, but and deals fall through. It's very stressful. There's tenants, like you mentioned, commercial or residential, wherever it may be, but so you do need to be very headstrong. But going through those times and going through the emotions, what was it, would you say, about mindset at the time maybe you didn't know about, which sort of helped, but also where you are now? Is there something you've changed and a shift in mindset that you've noticed?
Yeah, and it's something that I try to talk about on my own podcast, because I kind of think that this is stuff that I wish I had been aware of at the time, and it's stuff that I like reminding myself as much as reminding my own audience when I'm talking about this stuff. But one of the biggest risks, I think, in real estate is a thing called continuity bias. And that is where you are under the impression that everything that you're enjoying today is going to continue to kind of pay out or do whatever. Your business model will continue to perform the way you're used to it, and all of this stuff. And there's a kind of a natural inkling for people to ignore the threat or the likelihood of that changing. And so sure enough, you can see the example. I thought that I had figured out the magic formula for becoming a millionaire. And I thought, okay, like, I'm making a million or 2 million a year. Why would I not spend like crazy? Because I'll just make the money again next year. That was the mindset, And whereas if you're conscious of continuity bias, you would say, Gavin, this is a cyclical and dynamic market, and this is going to change. And the millions that you're making today, that could be negative in 2 or 3 years, as it proved and turned out to be. And it's just being conscious of that. I think an awful lot of people just have their head buried in the sand when it comes to those kind of hard truths. And of course, it's also temptation is very hard to say. Like, people like to say that they can resist temptation, but it's when it's dangling in front of your nose, like, it's not so easy. And will you go, and when you get a big payout, like, will you go and buy yourself a fancy car? No, that's not a sensible thing to do. Sure enough, you'll be walking around a showroom and it'll be like, wow, you can afford it, And
Yeah.
This is what happened to me. And I can remember I was driving a very nice car, and I had this big win. My stock market portfolio was shooting up as well, and I remember I bought some shares, and they were up like 700,000 or 800,000 in the space of a couple of months. And I can remember thinking, God, I'm like making it everywhere. So I went to the Porsche garage, and I was walking around Porsche, like looking at brand new 911 turbo, and I was thinking, like, why on earth would I not just buy this? Like, because I can afford it.
Yeah.
Like, just look at my stock market portfolio. And that was the mindset that I had, even though the back of my mind was saying, this is stupid. You've got like a car that's not even like 7 months old. Like, why would you buy a Porsche now? But that's the kind of temptation when you suddenly your circumstances change like this. And so continuity bias is the biggest thing. Cyclical, dynamic market. Don't ever forget it. And like if you're there thinking that, you've got a great deal lined up, ready to go, there's a very strong likelihood that some spanner will be thrown in, and it's going to be thrown out of bed. The other thing in mindset, and it's something that kind of helped me overcome when I had to kind of like humbly ask my brother for help, is that moment of truth when you suddenly realize, geez, there's nobody here to help me. And you start looking back at what you've lost and you start dwelling on that. And something that I didn't really, whenever somebody mentions Stoic philosophy, to me, that kind of sounds a bit kind of like arty, and it's like, oh, don't talk to me about bullshit. But actually, if you give it a moment and actually pay some attention to it, it's all about how to deal with this kind of thing. And like being a Stoic just means that you don't look at what you've lost. You always look at what you've got. And if you have lost something, you simply look at it as a test. Are you worthy? I mean, if you're in the real estate business, you are naive in the extreme to think that it is a linear, upward only journey. Like you're just naive. You're living in fantasy land. And so if you're a Stoic, you're going to actually say, yeah, of course it's going to fall. Like my value today, my net worth might be X, but I'm absolutely certain it will be half of that in 3 years' time. And not to like be beating yourself up about it, but just to simply go matter of factly, like, yeah, this is the business that I'm in. Like I expect this to happen. And if a deal falls out of bed, yeah, why shouldn't I expect it to fall out of bed? Like this is the business we're in. If it was easy, everyone would be doing it. And so simply to flip the switch and say, whenever, like, and don't get me wrong, like when a deal that's worth 2 million falls out of bed, it's pretty devastating. But
Yeah.
not to allow it to devastate you, but simply to turn around and go, you know what, this is simply a test. And the test is you claim to be a property investor or a real estate, a leader in your real estate sort of sector. Are you worthy of that position? Because if you are, you will take this and you'll just get on with it. Whereas if you're not worthy, you'll be going home depressed and you'll be crying in your milk, in the morning at breakfast, like, oh, I lost this money and all this. And the reality is everybody suffers loss, and just like, shake yourself off and just move forward. And that's the way I've kind of dealt with it going forward now. So I don't take too much emotion in the win, because I think that the next one could be a big loss, and therefore that's how you kind of go forward.
Yeah, I mean, I'm always on the mindset as well of it doesn't matter what the market is, whether it's up or down. I will just adjust. I have to just accept the fact that market conditions change, like you mentioned, and you either step back and pull yourself away, which isn't always the best thing to do, or you adjust with the market. Because what you will realize when you look back over time, doesn't matter what the market conditions are, there's always somebody doing something in the market. So when it's good, you've got people that are doing well with a certain way of doing things. And then when it's bad, there's still people that do well from that. So as long as you've got, one, the mindset, and two, the realism to understand that you will have to adapt, and hopefully you've got the capability or the assets or the funds to be able to do so, no matter the market conditions, you can always do something. So you need to adjust. And I think, especially now, what I've noticed coming through sort of the property industry is there's people that maybe have got on at where the wave has been very easy to ride, and they're not maybe aware or haven't been involved or aware or done their research in terms of what can happen or what has happened in the past, which is very likely going to happen again in the future, as it always does, because it's cyclical, and they don't prepare themselves correctly when structuring their assets or their investments. And I think what we will see when the market does change is that those people will unfortunately suffer, which always happens. There'll always be,
And
unfortunately, that
you're
way.
absolutely right. You're absolutely right. The thing is, Toby, it's not it's not exclusively real estate as well. Like, just look at the crypto
Mm,
market, what it has done in the last couple of months. The amount of stories that I've read of people that were up like 4 or 5 million, and they were like buying Ferraris, and suddenly their portfolio is worth like 25,000, like, and they are, in shock. And I saw that in 2000, when the dot-com crash happened. It was
yeah,
exactly the same. People just thought that this was like this magic, moment in time where they were all now millionaires and they were living. Apparently, at the moment, there's a glut of Rolex and Patek Philippe watches on the market being sold by all these like former crypto millionaires, and they suddenly realize that they can't afford anything, and they got to
yeah.
go and try and get the money back, and so they're selling off their assets and stuff.
Wow, wow, yeah, that is incredible. That's a very good point in terms of crypto, actually. So out of all that, obviously, I know in mindset you've let us know sort of what you learned from that side, but in terms of property specifically, what would be the most valuable thing you would say you've learned throughout that journey that you've been through?
I would say, probably, if you're thinking about getting into the property market, is first of all, don't delay, insofar as there's a lot of self-limiting beliefs, and I work with clients who don't realize the value that they're already standing on. And so I've got clients that I have a small coaching mastermind, and I bring guys on that are, contractors and stuff. And what they want to do is they want to move from being a contractor working for clients to being somebody who's able to build their own developments and become like a house builder or whatever. And so I've been talking to these guys, and some of these guys are contractors that, they have a construction firm, and and a lot of the time they don't realize, like, you're standing on a mountain of value. Like, you know how to build a property from like digging a hole in the ground to finishing it, somebody moving in, but they think that they're not ready for the property market. And I kind of go, like, you are so ready. Like, it's just, but it's a lot of the time it's the mindset. So don't let it hold you back. Obviously, there's a lot to learn, and it can be a little bit overwhelming when you start the process. And so obviously there's podcasts that can kind of help you, and there's stuff like that. There's also coaching. Be wary of coaching, because I think there's a lot of guys out there that are overcharging for coaching. And there's tens of thousands, like, to become, to follow this formula. And the reality is that the market is dynamic, and so the formula you're being taught, that could be old hat, like in 6 months or a year. And that's like the stuff that I made all the money on. You can't do that anymore because everything's gone online now. So nobody is buying these like retail units any longer. And so the market is dynamic. Don't ever forget it. And so if you're making a load of money right now, just try to kind of wake up and realize that you might be in a very, very restricted moment in time when you're doing really, really well. So fantastic. Put the money aside. Don't blow it on like lavish expenditure, and don't get your lifestyle. Some of the things I've heard about Premiership footballers and like guys in America in basketball and stuff. These guys, they make 50,000 a week, 100,000 a week, and 80% of them are bankrupt within 5 years of retirement. And that is because they've built this lifestyle around their income. And when their retirement stops and their income stops, suddenly that's the end of it. The train has stopped, but they still want to live that lifestyle where they've got the kind of the flashy car and all that, and they're not able to fund it any longer. And they end up having to declare bankruptcy. And that happens in the property sector as well. If you allow your lifestyle to get ahead of where you are financially, and you start spending the profits like from the development rather than rolling it into the next one and preparing for a downturn and having your rainy day fund and things like that, then you're just going to lose.
Yeah, that's a good point. I mean, I always get asked sometimes from clients or even just friends in terms of the portfolio that I have, and they say, "Oh, you must love it. You must be going away on holiday." No, I say I run it like a business, and it's a business I'm not involved with. That money just sits there, it rolls up, and when it gets to a point, it gets reinvested, and then some set aside. I don't touch it. I don't, because that one day where I start to sort of dip in and take it, I then become reliant on it, and when it's not there, if something bad happens, then that's me completely screwed. And that's the one bit of advice I actually usually give anybody when they start investing in property. I just say, look, just run it like a business, keep it separate, don't become reliant on it. And okay, depending on your circumstances, of course. But yeah, and that's correct. And what you mentioned about the footballers, I've come across some footballers as well. When I've sold, when I was an estate agent, I was selling a few footballers' properties, and I remember, I never forget the one when I found out who it is, and I remembered him, and I knew the sort of level he'd played at for many, many years. And then I saw the property I was selling for him. And let's just say it wasn't a mansion, it wasn't a big house. It was very, very modest, which is nothing wrong with that. But you could tell from what we saw and what we knew through the transaction, he clearly didn't have the money that he's probably amassed over that amount of time, like you said, because they're encouraged as well. They're always encouraged to spend their money and sort of live that lavish lifestyle because it's part of that. But like you said, once it stops and once that tap of money's turned off, unfortunately, a lot of them do struggle. It's the clever ones that are financially savvy, or maybe they've got good financial advisors. They're the ones that have the longevity and will do well in the long term.
A lot of the time it's the family, actually. If you've come from, if your mother or father are kind of, have a bit of wisdom there, they'd be like, make sure you save, and all this kind of stuff. Because a lot of these guys will be, they come from very, very humble beginnings. And so their parents have no experience of money or anything like that. So they can't give them any advice. And so these guys, it's like, money falling from the sky. And it's like, of course, like, let's go and spend. And that's all it takes is an injury and you're now out of the game, and that's it. Like, you've spent everything. It's a shame to see it.
It is, yeah. That is always a shame to see. And lastly, last question I'll ask, which I like to ask guests, and very relevant at the moment. How do you see the property market moving forward at this moment in time, where we find ourselves, obviously, with inflation, etc., and what's going on in the wider sort of economy and world?
I think that, well, you got to, obviously it's there's nuances there, because you've got commercial and you've got residential. On the commercial side, I think it's a challenging time because of, the reductions in space and stuff like that. If you're in logistics, it's not such a challenging time. It's a great sector to be in. When you look at residential, I think there's two ways to look at it, and it's kind of like crystal ball gazing. I look at the demand supply imbalance, and I think that the market is like bulletproof and it's going to continue to perform well. But then if you look at the average family who is out there, funding a life, putting kids through school, all of this kind of stuff, you're watching your fuel bills go up. You're watching your grocery bills go up. You're watching, like, pretty much everything, because of inflation, go up. And then on top of that, you're now also looking at the rates that you're paying for mortgages going up as well. And so that little wedge of extra cash that you have is being dwindled, eaten away. And I think that has got to impact the affordability and the ability to go out there and buy a house of a certain size, or get a mortgage, qualify for a mortgage of a certain size. I don't think that can defy gravity. That is definitely going to impact it. Now, there's still going to be a healthy demand out there, but whether it's going to be a forced reduction of prices in some way because of the fact that you've got all of these people that can't afford it any longer. So is the property going to sit there for sale for longer? Or are the people who are selling it going to have to reduce the price in order to capture that lower price point that now people can only afford to go to? So it's really difficult to say. A lot of us would all like to kind of deny that there's a possible sort of shaky road ahead, but I think it's possible that it could get difficult because of these things, and the fact that inflation is there, the war in Ukraine is having an impact, and there's a certain amount of uncertainty, and so I think it'll be touchy-feely for the next bit, just to kind of figure out. I wouldn't take any massive gambles. I would be fairly prudent with what I'm doing going forward until there's some clarity.
Yeah, no, that is good point, and good advice there. I think, interestingly, sort of a conversation I was having the other day, and it sort of sprung to mind because we were talking about, obviously, like you said, sort of people's sort of finances being sort of restricted with inflation. And when I sat there and I thought, well, what I can see happening more so in certain areas of the country as well, and certain sort of markets, sort of certain price points, etc., is what we've had for quite a while is a bit of a you could call it artificially inflated prices, where people saw the market doing so well, they were like, right, just throw it on for this amount, and they were getting it because the price was going crazy. And I think what we'll see now is a bit more of a realization and a correction between sellers and buyers, where sellers can't go on the market for whatever they figure they pluck out the sky just because the market's doing well, because buyers are going to be resistant against it. So there'll be a bit of a leveling. So it may be perceived as as some prices dropping, but I don't think in reality there. I think they'll be sort of slowing down and coming to a more realistic level and more steady level, which again, I always say, look, a steady market is always a good market to maneuver in, because you know where you stand, your feet are solid on the ground. So I can see that definitely in sort of in certain sectors, certain locations. That's where I'm at the moment swaying towards. But like you said, it's all crystal ball, all speculative. And I think we've got a couple more months of data which we need to filter through before we can get even more of an understanding of how the market is performing. But yeah, like you said, the supply and demand imbalance at the moment, for me, I think it's that rock which is keeping it there. And until we start seeing that start shifting, I think we will sort of still continue in a fairly solid market until we see a shift, if it is to come. But only time will tell, of course.
Absolutely.
Brilliant. Well, Gavin, thank you for today. It's been amazing hearing your story, and yeah, it's so insightful. And again, hearing about sort of the mindset and everything like that. If anybody wants to find you, where can they find you, and what sort of handles do you use?
Sure. Yeah, I have got a website that goes by my name, Gavin J Gallagher. The J is important because there's like hundreds of Gavin Gallaghers out there otherwise. So gavinjgallagher.com, and my social media is Gavin J Gallagher, and my podcast is called Behind the Facade, and it's kind of like what's going on behind what everyone sees. What's going on behind the facade. So that is that's me.
Definitely, you got to check that out, guys. And what we'll do in the show notes, we'll put a link to everything, so you can reach out and check Gavin out and check out his podcast. So again, thank you for being on our podcast, Gavin. And yeah, I look forward to keeping in touch and speaking with you soon.
My pleasure, Toby. It's been great. Thank you.
Thanks.